welcome and thanks to all the eminent panelists and who are sharing class with me. And on behalf of Indian Merchant Chamber and tax consultants, it gives me a great pleasure to welcome all of you for this interactive meeting on attack on black money. I knew that money has a lot of power, but it looks like the black money has a lot of power. I haven't seen at 6:15 in the evening on a working day, there is not a single seat available. So I think black and money both, has a lot of powers. I believe that for a good country to have a good governance is extremely important. The word black money has really given a black color to India. There are not too many countries which are perceived to be advanced countries where this black money word is so freely used. India is unfortunately one country. Even child will say, "Iska kya bhav hai? This rate of property is so and so. Itne mein black money hai, itna percentage check money hai." Who is who in the boardroom? Who is who in the train? Fearlessly talk about black money, quote price, and nothing happens. I was just talking about 2.5% of the population of this country is registered as a direct taxpayer. Only 2.5% with a base of 1.2 billion population. But probably I am not up to date with the statistics. How many people have imported cars or impressive cars, impressive houses? I think the figure is way beyond 2.5%. So why the taxpayers are not reflected in accordance with the wealth creator and wealth possessors? There is some mismatch. So government of the day has a concern that how do we manage this balance? And government needs money to do its own work, to defend you and me, internally, externally, provide infrastructure, services, etc. So government needs money. Where does the money come from? However, so as the Indian Merchant Chamber of Commerce, we fully support government in providing any deterrent that they need to curb black money. Having said this, we are also concerned whether these tools which are provided to government are used rather than misused. Often we have found that those who are supposed to be preventing the cash money, prevention of the black money, are the biggest generator and the cause of the black money. I am sorry to say if somebody is coming from the department currently working on past, but it is an open secret and they won't even shy about it. We at Indian Merchant Chambers, this year we have a concept called growth with governance. We believe that growth is the natural birthright of every human being. But growth alone without responsibility is the most dangerous. So growth has to come along with the governance. And governance means compliance. Compliance means doing the right things. I am not here between you and the eminent speakers, but one thing which I like to share with my family members, my office staff, and to all the friends and the well-wishers, that look, you and me have a choice to stand in elections, become a lawyer, become chartered accountant, become a businessman. We all have decided to be professional businessmen, bread earning, but we have decided not to be the lawmakers. And if you are not a lawmaker, you are selected and elected the lawmakers. Now whatever laws have come, you have no other option but to fulfill the requirements of law and fulfill the obligations. However, certain laws have flaw, certain laws are debatable, certain laws are not reasonable. But in democracy, we have a right to address that. So while addressing the compliance, you don't have an excuse that this is a stupid law, I'm not going to fulfill. We are advocating fulfill your obligation towards your compliance. At the same time, democracy gives you a platform, forum, mechanism to address it. This forum, this debate, this discussions today, and this interaction is one of those. So I assure you on behalf of Indian Merchant Chambers, whatever is the outcome, under the able leadership of Mr. Pradhan, who is the Director General of the Indian Merchant Chamber, he and his team will be making notes and and we will be making few recommendations, suggestions and presentations to our Member of Parliaments and whomsoever is needed in Delhi. So this discussions today's evening is not an ample, just an interaction in one of those evenings. I want to assure you, please participate generously, listen to our panelists. You may have your views. I'm sure our panelist is going to give their bit. And I must acknowledge the presence of very eminent lawyers and the experts, Advocate Mr. Sanjay Sangvi, Mr. Nishit Desai was to come but he could not come. Mr. Savla, I must thank him, the President of the Association of the Direct Tax Consultant, who has helped us to design this course. One more thing we have done is, and I must share this before I conclude, since you are in the premises of Indian Merchant Chamber, we have an arbitration center we have just opened up to give justice. What we need is a speedy court. Courts are, we have lovely judges, but we have, all our courts are under stress. So we have decided it's not enough to make a presentations and make an appeal and influence the lawmakers, but we have taken a direct action. We thought that we should be directly contributing to the cause, and we have now created an arbitration center which is known as Suresh Kotak International, the arbitration center, which is on the 3rd floor, which is, we are trying to make it at the level of Singapore arbitration center. Singapore has a lovely arbitration center. I was told that majority of the cases are being fought by 2 Indian brothers, that is between you and me. We don't have a faith in our courts. We go abroad and do and support the Singapore economy. So I think it is a time has come. We should support our own system. India, with whatever, I believe, whatever flaw we have, whatever legacies that we have inherited, and especially last 10 years has been a dark days because of corruption and scams and deinstitutionalizations of the process. But India and Indians have so much of a strength. No power will stop our progress. We all have also inherited huge amount of cultural strength that we all derive from our forefather. Wealth creation is our birthright, but I would urge that wealth creation comes with governance, is the only sustainable model of economy. With this word, let me once again wish you good evening. Thank you for being part of this session.
Thank you very much, sir. Now we invite Mr. Bharat Singh Savla, President of the Chamber of Taxation Center, to give the introduction.
Good evening, everyone. Chairman of the organization, Mr. P. Speaker from the Assembly Assembly, President IMC Prabhu Thakkar, Mr. Chairman of Indian Tax Committee of Tax Institutes, Mr. Arvind Pradhan, Director of IMC, past presidents of the both organizations, seniors, ladies and gentlemen. I join Mr. Prabhu Thakkar in welcoming you to this lecture meeting, Attack on Black Money. Black money has been talk of the town for last since the elections have on the clock. We are also receiving on the WhatsApp the list of these many persons are holding account in the Swiss bank. They are being holding money and so on so. During the election agenda, when this full-fledged budget was presented by the finance minister in the parliament on 20th of February, he said that the first and foremost pillar of any tax proposal is to attack on the black money, problems inequality and poverty, and generation of black money needs to be dealt with effectively and forcefully. Current legislations which are there are not effective. Hence, it requires a new legislation to be introduced. And with this, the new bill was introduced. And this was foreign income and assets imposition of tax bill 2015. This act as a bill has 88 sections, which are the lines of the income tax act. The provisions in the bill, there are no provisions in the bill which will help bringing black money in India. Neither the provisions are there which will control the generation of black money. I have been told that this bill is part of the money bill, means is fine, it will not go to the Rajya Sabha for its passage and it may not go to standing committee. But the certain political circles, they are advocating the provisions in the bill are very harsh. Imprisonment period of 10 years is too high, hence they should be sent to the standing committee or it should be diluted. The provisions of the bill are no doubt harsh and tough, but it has to be there because when it is dealing with the government. The other issue is it gives the ample power to the person who is the administrator, the way constitutional matters said. Giving the powers to the administrator is like what we say is in the Gujarati saying is the Mandra and Aruno Pura. So giving the liquor to a monkey, you see how it works. The similar things happens here too. One of the suggestion it was there that instead of having this money, government should also pursue United Nations Convention on Corruption. So this may have something on this. The bill provides a very small limit who will be not covered by this law of 5 lakhs. It's suggested that increase the limits so that small people are not affected on this. Even the person who is a non-resident at the time when the income is generated and currently is a resident of that country, of India now, he is also covered probably unless he doesn't disclose this, he will also be part of, he will be victim of this bill. Another thing, in case certain discussion trust is formed and the Indian resident of India is a beneficiary of that, even though he is not receiving any income during the year, he may be required to pay tax on those undistributed assets. Many such things are there, which our chairman and the speaker for the day will throw light, and probably it should help us to give some representations before the government, but the small people can be moved away from the harshness of this bill. Just a few sentences, few words about the chamber. Chamber of Tax Consultants is a probably one of the oldest organization in India, with the members from the chartered accountants, advocates, tax consultants, and few corporates. It's 88-year-old organization, and we have very good mechanism, very good work we do on the representation. And every year we have been invited by the Finance Ministry for pre-budget memorandum. Recently we also been invited by the Standing Committee of Finance, where representation was made of the Punji schemes. And for the benefit of the members who are facing certain issues, we have been very active in filing petition. Currently, when the taxable report forms were modified and the timing extension was not given for the submission of returns, the chamber has filed the petition and the Bombay High Court has accepted its plea that it was extended, the period of return was extended. With this few words, I welcome you to this program and wish you a good day. Thank you.
We now invite Mr. Naresh Panjwani, the Chairman of the International Taxation Committee of the Chamber of Consultants.
Dignitaries on the dais, ladies and gentlemen, it is my pleasure to introduce to you today's chairman and the speaker of this session. We have Mr. T.P. Oswal as the chairman of this session, and his biodata shows two of the most important issues is that he is a member of the newly constituted subcommittee on transfer pricing for developing countries by United Nations, and he was also a part of the previous subcommittee where the first edition of the United Nations transfer pricing manual was published. This is the committee which helps developing countries to form their policies on transfer pricing. Otherwise, the developing countries would take away their profits as well as their tax revenues from developing countries. He is also co-chair of IFA 2014 Mumbai Congress. In October, annual Congress of International Fiscal Association was held, where more than 1,600 delegates from all over the world came, and he was the co-chair of that. He is a visiting professor in Vienna University of Austria and has been given several lectures and contributed several papers in our technical conferences. I welcome Mr. T.P. Oswal to this session and also Mr. Prabhu Thakur to offer him a memento as a mark of respect. Sanvi as the speaker. He is a chartered accountant and a lawyer and is practicing now as a lawyer with Khaitan and Company. He has advised on domestic as well as international tax issues pertaining to several of his clients across various industries and also represented the matters right in the Supreme Court. Before joining Khaitan and Company, he was with PwC, Arthur Anderson and RSM and extensively advised on corporate taxation and other related issues. And he has also assisted Mr. Dinesh Das, a very senior tax counsel of the Supreme Court, in revising the very well-known commentary on income tax by Mr. Palkhiwala, whom several of the tax professionals consider it as a Bible. He has been nominated as one of the leading tax advisors by Euromoney's Tax Advisors Guide 2014, and I'm sure you can look forward to a very interesting session from him. May I request our President of the Chamber of Tax Consultants, Mr. Paras Safa, to offer him a memento as a mark of respect. These few words, may I hand over the session to the chairman, Mr.
Good evening, ladies and gentlemen. Dignitaries on the dais and officers. It is my pleasure to be here with you all in this evening. Not in the capacity of a listener, but as a chairman, whose role is literally very little, except for time to me. Let me share some thoughts on the subject of undisclosed foreign income assets bill, which was presented before the Lok Sabha, and I am quite sure it will be passed swiftly in Rajya Sabha as well, because I don't think the money bill requires any major considerations. But the way and the manner in which the bill is proposed, we all welcome a bill of this type, but for some clauses. It is always good an intent of this government, which has been, in fact, has been made very clear that Mr. Modi has been making public speeches before elections, and during that time, I'll bring the black money. Possibly it was election stunt, nothing else. But the opposition took it very seriously, made him to implement his intent, cornered him in the Lok Sabha. So he had no other choice than to bring the bill. I don't know who are the scapegoats. Those who have ruled the country for 60 years, who would have money abroad, of course. The businessman's money, of course, is used in an officially created structures. But the issue is, are you intending some particular sector to catch hold of? As Bala said rightly, that the bill has been introduced. I think if you look at the provisions of the bill, it is to keep the money away as much as possible, not to bring the money. Because the provisions are so draconian, I do not know really whether it is possible for somebody to comply with the provisions of law. Even an advisor would have difficulties in advising on these structures because they can also come in the amendment provisions. The way this government in presenting the first budget this year, first full-fledged budget, when I say, three things have come up. One is the concept of place of effective management, POEM. The companies which are regarded as resident, foreign companies of the Indian origins or Indian owners which are set up abroad are regarded as resident of India under circumstances. I don't think any company could be left out. And Indian companies, all financial, functional and important key decisions in substance are taken in India. I don't think even a Tata would be giving the authority to their Chorus or Jaguar management board, which has a full-fledged functional board, to take all decisions independently. Financial decisions, treasury decisions will be taken from India. Whether to expand a particular line of activity or not to expand a particular line of activity will be taken first of all by the board of Tata here. And if those decision making at any point during the year, this one phraseology which has become very popular with this government. Look at the amendments which have been made in the return of income and the tax laws. At any time during the year, you will be regarded as a resident of India. Once you are a resident of India, your foreign account has not been disclosed, you have not filed your return, all these consequences will come under this bill. So this is a major concern. First major change. Second change, the environment, how the environment has undergone a change. Second major change is this undisclosed assets and income bill. Atmosphere is now getting initiated. And coupled with the fact that we have a return of income. Of course, much hue and cry was made about that return, so therefore the government at least came back saying that we will amend the return. We are constituting a committee. But if you look at those clauses which were inserted in the return of income in last 3 years, 12, 13 and 14, requiring you to make disclosures. If you have financial interest in any entity abroad, if you have bank account or authorization of operation of bank account in any bank account abroad, if you have got a companies abroad, if you have got immobile properties abroad, if you are a beneficiary of a discretionary trust or a trust, or you are a trustee or you are a settlor of a such trust abroad, you must file such details in the return of income. And if you have a foreign bank account, maximum balance. Now all the requirements coupled with one more requirement has now got in this year's return at any time during the year. No statutory changes in the rules have been made. Act has not been changed, but the form has undergone substantial major change. Apart from the details of travel expenses, etc., which have been sought. One point which comes to my mind, I am not going to dwell upon more time on this subject, but only introducing some of the issues. What do we mean by financial interest in an entity abroad? What do we mean by beneficiary of a trust abroad? If you are a beneficiary of a discretionary trust, which was a concept under the return of income, as well as now the concept under this bill, which says if you have discretionary, if you are a beneficiary of a trust, make a disclosure. How do you do that? If I am made beneficiary by somebody, I do not know, I have not received any single penny. I do not know about it. My brother has set up a trust abroad. Let's assume here. Luckily, my brothers and sisters are in India. And then I am a beneficiary abroad of a trust. I would not know about it. It means if I have not done anything like that, if I have not disclosed that, it means I am liable for the action under this bill. Major change. And if it is a testamentary trust, what will happen? How do you do that? Second is the bill concept. One of the most important concepts which has come in the bill is the burden of proof. Burden of proof of non-culpability of your actions is totally on you. I make an accusation on you that now you prove it. Proving positive is possible, proving negative is impossible. And this is one burden of proof. this law of the black money bill, which popularly known as attack on black money, was the title. That the black money bill is nothing but criminalization of income tax act. We chartered accountants are not taught to become criminal experts, criminal law experts, civil law experts, but now this is a law which is getting converted into criminal provisions. And the law has to be dealt with seriously, and therefore, if you commit any offense, minimum penalty is 10 years imprisonment, prosecution. Now, if a person has a bank account abroad, whose bank balance is 5,10,000 rupees, his penalty is 10 lakhs at 10 years. And if a person who has a bank account, who has a bank balance more than 5 crore rupees or 500 crore rupees or 5,000 crore rupees, penalty is 10 years imprisonment. It should be scaled up, not scaled down. Something should be done. I don't know really is it proper. I am quite sure the speaker of the day will deal with some of the issues I am raising for you. Now the next issue possibly is if the properties you have abroad and the value of the property has to be taken into on the basis of today's date, on the date of disclosure. You may not have liquidity to pay the tax. The issue is, and if you do not pay the tax in a proper time, the immunity will not be lost, or possibly the scheme will be not available to you. The issue for consideration here is, in case if suppose I make a disclosure and I do not have money to pay the tax, the disclosure will not be accepted, and if disclosure is not accepted, the question is what other actions will lie against me under which provisions of law. So many provisions of law will at a time apply, and if they are to be compounded or they are to be cumulatively held as a punishable is an issue by itself. Provisions will apply to the residents whether he is an expat or an immigrant. It will apply. So expats, of course, for first 2 years he will be exempted because he will be a status of a resident but not ordinary resident. But if a person becomes a resident, all these provisions will apply, and therefore he has to make a disclosure of all the foreign assets, foreign accounts, everything. A person who has taken the money abroad in the LR scheme, now this has been invested somewhere. He has a foreign interest in an entity abroad or in any asset abroad. He has to make a disclosure. There are so many consequences. Not only that, once you have fallen in that love of the foreign assets, your reopening will remain for 16 years. Assessments will be opened for 16 years, and that is our Income Tax Act has to be changed. Title of the Income Tax Act has to be changed now. It is the Re-Income Tax Act, reassessment. Everything is re here. Another important issue is this bill, though it is introduced in the present form, in my opinion, it is going to create huge difficulties for the even persons who want to honestly make a disclosure and pay the taxes. Look at the experience of some of the countries like Italy or USA, who have been able to collect $5 billion and $50 billion returning of Italian assets in Italy, which were very helpful for the Italian government. I have my own doubts how much will be the estimated collection on account of this bill coming up. Let's see. Let us hope I will be proved wrong and government will be in a position to get good money, and I wish them all the good luck. Thank you very much for listening patiently. I request the speaker of the day to deal upon the subject in detail.
Good evening, friends and seniors. I must thank Oswald for having your good space for me to make my presentation. The way I have structured my presentation is to give an overview of this new law and try and highlight some pertinent issues that we believe are likely to arise before government gets the benefit of this intended law, or a taxpayer who intends to come clean and pay the taxes can take some real advantages without exposing himself to any undue risk. So in terms of introduction, of course the focus is on unaccounted money and assets stashed abroad. You are aware It all started from HSBC Geneva, where Government of India received information of alleged account holders who are said to be maintaining accounts with HSBC Geneva, and that information has traveled to India via Government of France and not from Government of Switzerland. Mr. Modi government has been saying that we need to have stringent laws to curb the problem of tax evasion and black money splash abroad. This new law will be effective from 1st April 2015, meaning from the current financial year as and when it is approved by the Parliament. This is the broad structure of the bill, which is basically divided into 7 chapters and about 88 sections. And the key elements are preliminary law, basis of charge under this new law, tax management, penalties, very stringent penalties, offence and prosecution, and one-time disclosure window. And please note, this is not an amnesty scheme. They call it one-time disclosure window, and in the highlights of this bill, government has taken adequate care to articulate that this is not any amnesty scheme. This is purely a one-time window for people to come, pay the tax and regularize themselves before this law becomes the bill becomes law. What is the scope of this new law? It applies basically to all people, all assessees who are residents of India, barring one scenario which I will come a little later. It does not in that sense apply to a non-resident. Now some crucial definition one need to be mindful. What is the meaning of undisclosed asset located outside India? It means an asset including financial interest in any entity which is located outside India and held by the assessee either in his own name or in respect of which he is a beneficial owner. And this "and" is very important. And he has no explanation about the source of investment in such asset. I may have a bank account with HSBC Geneva, but as long as I am able to explain as to how I have funded that account, maybe I have sent money through LRS and that is recorded in my books of account, then I am not covered under this new law. So the point here is undisclosed asset located outside India means an asset located outside India, be it a bank account or some interest in a foreign entity, or whether you are a beneficiary of a trust and so on. As long as that foreign asset is held in your name, or you are a beneficial owner in respect of that asset, and you have no explanation as to the source from which you funded that asset, or the explanation that one provides to the assessing officer is not satisfactory in the sole opinion of the assessing officer. Now the bill also defines what is the meaning of undisclosed foreign income and asset. It means the total amount of undisclosed income of an assessee from a source located outside India and the value of an undisclosed asset located outside India. How does one value a foreign asset? The bill says that it has to be taken based on a fair market value, and the mechanism of computing fair value will be separately notified. What are the tax rates and implications? Any undisclosed foreign income will attract flat 30% tax without any exemption, deduction or set-off whatsoever. It will attract 3 times penalty of the amount of tax. The normal interest which we otherwise pay under Income Tax Act Section 234 ABC will also apply if one does not pay advance tax, and there are some grey areas there. There is a penalty of 10 lakhs rupees, flat 10 lakhs rupees, if a person fails to report a foreign asset in its return of income, or a person fails to file a return where it was supposed to report the foreign asset is for holding during the relevant assessment year. As also mentioned, there are stringent prosecution provisions which ranges from minimum 6 months to maximum 10 years. So it could be 6 months to 7 years, it could be 3 years to 10 years. And please note, under this foreign asset bill, one is not entitled to approach the settlement commission forum. So whatever one needs to do to regularize the thing, that must be done within the 4 corners of this foreign asset bill. Provides one-time compliance window. They call it one-time compliance window, and I would like to read out a few lines from that. This is what the highlights of this this foreign asset bill say. One-time compliance opportunity. The bill also provides a one-time compliance opportunity for a limited period to persons who have any undisclosed foreign assets which have hitherto not been disclosed for the purpose of income tax. Such persons may file a declaration before the specified tax authorities, which is basically principal commissioner or commissioner, within a specified period, which is yet to be notified, followed by payment of tax at the rate of 30% and an equal amount of penalty, so effectively 60% tax. Such persons will not be prosecuted under the stringent provisions of this new law. It is to be noted that this is not an amnesty scheme. Government is very careful to clarify this at the outset. It is to be noted that this is not an amnesty scheme, as no immunity from penalty is being offered, because you pay 30% tax and also pay equal amount of penalty. It is merely an opportunity for persons to come clean and become compliant before the stringent provisions of this new act comes into force. Now, how does this one-time window scheme work? First, let me clarify at the outset. This one-time window scheme is not available to cases of HSBC, Geneva and LGT Bank, Germany. In the beginning, I said that this foreign asset bill otherwise or basically applies only to residents of India, but in respect of this one-time compliance, it also applies to a non-resident who has an unreported offshore asset, and that asset was acquired from income which was at the relevant time chargeable to tax in India. So the bill says that this one-time compliance opportunity is available to all persons, whether resident or non-resident, who have not previously disclosed their foreign asset for tax purposes in India. This opportunity can be availed by filing a declaration in the prescribed form and paying 30% tax and equal amount of penalty. The form as well as contents of that so-called declaration is yet to be notified by the government. What are the saying? What is the beauty of going for this one-time compliance? You don't pay any interest and there is no prosecution. So the total cost for a declarant is 60%, 30 principal tax and equal amount of penalty. No interest, no prosecution. This tax and penalty will have to be paid by a date to be notified by government, and the tax so paid will not be refundable under any circumstances. The bill also clarifies, and I think it's very logical, that whatever asset a person declares or reports in this one-time window will not then again be taken in computing the taxable income under Income Tax Act. Similarly, wealth tax will not be levied on a foreign asset which is declared under this one-time window. So we will therefore say that declaration made by a taxpayer will not be used for imposing any penalty or prosecution under Income Tax Act, Wealth Tax Act, FEMA, Companies Act and Customs Act. It does not refer to prevention of money laundering. Now, I believe there are some crucial issues in the implementation of this scheme. I want to read out one section which deals with this concept. It's from section 68. And please note the language, section 68. Notwithstanding anything contained in this chapter, where a declaration has been made by misrepresentation or suppression of facts, such declaration shall be void and shall be deemed to have been never made. Now please consider, a person comes forward and makes a declaration in good faith, to the best of his knowledge and recollection. Now, what is the mechanism provided in the bill to decide whether there is a misrepresentation of facts or there is suppression of facts? Who makes that decision? Who makes that determination? And what is the process of law to be followed to make that determination? The bill is completely silent. I would like to believe, since the declaration is to be filed before the principal commissioner or the commissioner, it's natural that that authority will sit down and determine whether there is any misrepresentation of facts or suppression of facts. As I said in the beginning, government is yet to notify the form which is to be utilized for making such declaration, and in all probability that form will also or is more likely to indicate what kind of backup or supporting evidence one is supposed to enclose in the declaration. For example, I declare income of 10 million US dollars. Then I would like to believe that I will also be obliged to attach some proof, maybe bank statements or a confirmation from the concerned bank that since the date of inception or opening of that account till the date of closure, the total balance or total funding or total operational value of the account is $10 million. Something like that. Some backup, some support is bound to be there. So my concern on this one-time compliance is that what mechanics are not specified as to how to make a determination that it is a case of misrepresentation of facts or suppression of facts. On what basis principal CIT or CIT will examine or cross-check whether there is a suppression of fact? Because they have access to no data. You take a classic case of HSBC Geneva. All that today they have is so-called stolen data which has come to the government of India through the government of France. So in addition to that so-called stolen data and in addition to my own declaration, for example, I have given bank statements or other such supporting document. I wonder what other evidence or documents will be in the possession of the principal CIT or CIT to make an independent verification and doubt the genuineness or truthfulness of my declaration and to come to a conclusion that this is a case of misrepresentation or suppression of facts. Whether hearing will be given by CIT before coming to a conclusion that this is a case of suppression of facts. I would like to believe that principles of natural justice must be followed here also, because this goes to the core of the issue. A person comes forward in good faith, he discloses his cards, he pays hefty amount of tax and penalty, and then we are leaving them high and dry. That doesn't stand to the principles of natural justice. I would like to believe that a hearing will be given, or at least it ought to be given, before reaching a conclusion. What is the legal remedy available to the concerned declarant if the commissioner or the principal commissioner takes a view that this application or the declaration is void on the ground of misrepresentation or suppression of fact? I would like to believe that one can appeal to the income tax appellate tribunal and one need not go to High Court or Supreme Court by way of writ or SLP. The bill contains a section called Section 18 which says that any order passed by principal CIT or CIT can be challenged before ITAT. So in my view, a determination by principal CIT or CIT that this particular case is a case of misrepresentation of facts or suppression of facts is a determination and therefore is an order. And that determination or order must be based on some reasoning which he will be required or obliged to record in his file and perhaps to communicate to the concerned declarant. So therefore, in my view, a determination or view or speaking order of commissioner or principal commissioner to the effect that this particular application is debarred on the ground of suppression will be regarded or is to be regarded as an order and therefore available to ITAT. One did not go down the trouble of writ or SLP. This one-time compliance window or opportunity is not available in certain cases. First, there are some clear stated prohibition. A case of prevention of smuggling activity is not covered. A case where search took place or notice of reopening has been issued, again is not covered. Those cases cannot take benefit of this one-time window. A case where any information, any partial or fully, a case where any information has been received by a competent authority of the government of India under a double tax avoidance agreement or tax exchange information or agreement in respect of an undisclosed asset, again is not eligible for this one-time window. I tried to jot down some issues based on our experience. As we all know, when a search takes place, Section 153A notice is issued. And 153A notice covers 6 years prior to the year of search. So if consider a case that Mr. A who wants to make a declaration under one-time window, and let's say he opened the account in late 2000, and account was operated till 2005. Search took place in 2014. So if one goes backward to 6 years, still the relevant years for him are still outside the purview of Section 153A. So it is not very clear whether the cases which are prior to 6 years are also prevented from taking the advantage of one-time window. Consider another example, another case. The bill says that when a person makes a declaration under one-time window, whatever evidence he is giving in support of his declaration, those evidence will not be used against him for any penalty or prosecution. So my question here is, if tomorrow after making the declaration, department comes across some independent evidence in relation to the same offshore asset, foreign asset which has been already reported under this window, whether that can open a new front for me and whether that can start a fresh round of investigation and prosecution. So again, the language does not give any clarifications, but to my mind, if one looks at the whole rationale and core of this law, if a declaration has been made by a person in good faith and he very clearly and skillfully articulates his whole case as to what is the nature of foreign asset, when it was introduced, when it was opened, what was the total funding, then at a future point of time that department has some independent evidence, that skillful declaration and drafting, in my view, will come very handy for one to reconcile and explain and defend the case. Another issue. Let's say Mr. A, who had $1 million in HSBC Geneva, he made multiple or different uses of that funds. Part of the fund was used to buy property, some amount was used to buy foreign securities, some amount was used to invest in offshore mutual funds and so on. And let's say that account was open 10, 12, 15 years ago and that person is not in the pink of health anymore, his memory is not serving as well as it used to be. So when he makes a declaration in good faith and to the best of his recollection, please note my words, I am saying that person makes a declaration to the best of his abilities and to the best of his recollection. He may be a senior citizen as an example. Now, inadvertently he omits or by oversight he ignores reporting one item of foreign asset which was purchased out of undisclosed foreign asset and foreign income. He reports 3 items, but by oversight, by bona fide mistake, he omits the 4 items. He forgets to mention the 4 items. And after some time, department learns about that 4 item independently. Can that person be now prosecuted and punished for that 4th item which was purchased out of the original amount which is already reported in the declaration? So again, there is no clarity in the law. To my mind, the language of the bill does not provide for, if I can use an accountant language, I am also an accountant by the way. So the language of the bill does not make any provision for human error, bona fide error or oversight. Another important issue, serious issue rather. The bill in the present form, I don't know whether tomorrow they will modify. No limitation period is provided for treating a declaration as void. I make a declaration in the month of May 2015. Now what do I do? Am I supposed to write to the commissioner, sir, I made an application on 15th of May 2015, it's almost 2 months. So sir, did you get a time to consider my application? Is it okay? I'm a little nervous. I did my best. Truthfully, faithfully, I reported everything. Sir, is it okay? When will you respond? So law is total, the bill is totally silent. So again, this is a serious issue for declarants. I think government has missed out the point here that people, not only that they want to come clean and regularize the thing, they don't want such nervousness and apprehensions and the risk. So if that is the concern of people and based on which they come forward and make hefty payment of tax and penalty and go through the whole process of law, is it not reasonable to expect from government that they should provide some time limit that if you file an application or declaration today, if there is no response from principal, commissioner, let's say next 3 months, then there is a deep approval. Something like that, 3 months, 6 months, 1 year, some kind of outer timeline must be made. It can't remain open-ended for all time to come. Many people are asking questions whether a foreign income which was earned prior to the enactment of this law is also covered under this new law. So if I have an income 5 years ago, it is reported as of 31st March 2015 or as of 1st April 2015. Is it also covered? To my mind, it is covered. So that is the whole fundamental of bringing this law. What is Finance Minister saying? He is saying either you come clean and take advantage of one-time window to the extent you can. Otherwise, one will have to go through the severe penalties and prosecution. Another practical query that we are receiving is that what happens to the ongoing cases or investigation, whether they will be continued under Income Tax Act or they will be transitioned to the Foreign Asset Bill, the new law. In our view, the proceedings which started under Income Tax Act will be carried forward, continued and completed under the Income Tax Act 1961. Of course, there are some exceptions, I will touch upon them. Whether principles of natural justice are applicable to the bill for bona fide errors. As I said, I could not locate any provision which makes any provision. I could not locate any provision which makes any provision for bona fide error. But the government in the highlights will be said that we will be following the principles of natural justice. A hearing will be given. Whatever material or evidence a taxpayer wants to submit, that will be considered, that will be taken into account, and based on all such things, a speaking order will be passed. One more aspect which is bothering the people, if I make a declaration, what happens to me under prevention of money laundering? This is another serious issue. When I was going through my presentation, one query came to my mind this afternoon. Let's say Mr. A, he reports two income. Let me call it domestic income, which is the regular income that we all report, salary, capital gain, business income, house property. And he reports foreign income, undisclosed income, I call it. So you have a return of income with a combination of pure domestic income and a foreign income. Now whether that person is supposed to file two returns, one under income tax, maybe ITR 2, ITR 4, and whether he needs to file a separate return in respect of the foreign asset, foreign income. Bill is silent. I was going through ITR 4, and I am sure most of us are aware. It already contains columns where you are supposed to report your interest in any your financial interest in any foreign entity, or whether you are connected in any way with an offshore trust, either as a trustee or beneficiary or as a settler. So those columns for reporting, offshore reporting is already there. So perhaps there is no need to file two returns. I would like to hear Oswal's view also. So my understanding as of now, one need not file two separate returns unless later on government modifies the law. But surely, the assessing officer will have to pass two separate orders. One under 143(3), assuming it is picked up for scrutiny, in respect of my domestic income, salary, house property, business income, capital gain, and other order under this foreign asset bill, section 10, subsection 3, where he will assess me in respect of my foreign income report. So he will have to necessarily pass two orders. The person may be the same because the authorities which are there under income tax act, the same people, same authorities are the authorities even for this foreign asset bill. So is there any issues, any queries, happy to answer.
Well, Sanjay has raised quite a few controversial issues and he has dealt with them in his presentation. A couple of issues come to my mind. For example, if a person who has come from abroad for good to become resident of India and for a long number of years he was abroad. Let's take the case of Dubai. He was in Dubai for 40 years. And now he feels tired and he wants to come back. In last 40 years, there is no culture of preserving any proofs, evidences, documentary evidences, except the bank passport. So in what circumstances the issue, how does the person has to disclose the source of income is a major issue. If he has not maintained any source details, the documentation properly, then is going to be a challenge because and the practice of maintaining the documents in India, which we have got, because we have got an easy availability of accountants at a very least fees. So we maintain all the documents, get it verified not once, twice, thrice, and therefore we have no difficulties. But the question is, in the foreign countries, this habit is difficult. I was just discussing with the President, that in a country like Italy, where they have they declared the tax rate for granting an immunity of 5%, and people brought in the money. Because that country knows that their officers, they have no inability, they know their vitals to make a cross verifications. The way in which we communicate, we have given by circular of the board an authority to all the officers to communicate in any foreign transactions to other foreign countries officers, to of course civility, and get confirmation, communication like in the ordinary course in India. Foreign countries, nowhere this atmosphere I have seen. I have not come across in so many countries, and I have been discussing this with at least the revenue officers of 120 countries with whom I am personally in contact with because of my UN connections. People say we do not have such concept. Now some countries like US is one of the countries where they respond to the clarifications not very quickly. Not all the countries do that. So in such circumstances, Sanjay, can you enlighten the gathering what advice they should tell the non-resident returning Indians before coming to India? They should close the accounts, make a systematic balance of that account properly, create an asset and then bring, or while they are non-resident and transfer these monies to their NRE account here and then safely come back. That's the first question for me. And then I would leave it to the public to raise the questions so that there will be a feast of answers also coming up from them.
The most important defense is to have proper documentation, and one should be in a position to explain from where that person got the money. For example, a person was in employment in let's say Singapore for the last 50 years. He can produce the salary certificate, employment certificate. Key, as I said in my presentation, there are two requirements to treat a foreign asset as an undisclosed asset. First, asset located outside India which is either held in your name or in respect of which you are a beneficial owner. And second, you have no explanation in terms of source of funds to maintain that asset. So if one is able to explain the source, then I think you are fairly wrong.
No, my question was very simple. You have been able to obtain the salary certificate, but officers in India would accept that certificate. But it might be a fake certificate. They want to know what is the source. Beyond that salary certificate, do you expect anything else?
As long as certificate is not fake, I don't think so. Let me write to my employer in Singapore. I will discharge my time office rules.
The time office is you have complete owners, not time office. You have to prove it yourself.
The person I would believe is giving a credible evidence. Let other side create some reasonable doubt that no, this is not acceptable. You should give some reasons.
No foreign employers even respond to the tax inquiry from here. And that is the reason you know very well that foreigners are not ready to take time for anything. This is a major problem. Well friends, these are the issues which are likely to arise once the officer passes an order and the recovery is required to be made from you. No, and then you feel that this is you are agreed by that order, no stay is valid. You have to pay. Now I will leave it to the gathering, August gathering to raise the issues for Sanjay to clarify.
Is anything is mentioned about the foreign liabilities?
In the sense?
Any liabilities has been already incurred over there?
No. Law clearly says no deduction for any expense, losses will be allowed.
No, losses. Liability. I have taken the loan from the bank.
Yes.
Bought a property. Whether I should declare the property as such?
Completely silent, and it's completely pro revenue. Whatever is the positive asset, you have to pay tax on that. That's how the bill reads. Yeah.
Was I correct? No?
Yes, exactly.
I'll give you an example. We have seen a case. Mr. A, he had said he funded a foreign account with $5 million over a period of 5 years. That money was used to trading foreign securities. Unfortunately, at the end of the day, 5 million became minus 1 million. So when I declare, am I still supposed to pay tax on 5 million? I said, no, sir, there was money, but I lost all the money. Now, revenue may say, no, since you had undisclosed original 5 million, you please pay tax on it. We are not concerned with your losses.
Bill speaks about one-time window of opportunity. Section 76B 1, which classifies pre and post facto information. So if there is information with the income tax department, then you cannot come out with the declaration.
Any information, not only information, any information.
Any information. Will it not be violative of Article 14 of the Constitution, equality in law? I am saying violative of Article 14, equality on law, in law, Constitution of India.
On the ground that
Equality in law.
why is the violation?
So there is two classifications. One is no information, although he is having a lot of large amount of undisclosed assets and income. The other one, merely because there is some inquiry started, initiated by income tax department, and still he cannot come out with the declaration because the inquiry started. So these two classification, second classification, section 76D1 speaks about this. So what is your opinion on that?
You are right. You are right in the sense that many people are facing trouble. They want to come clean and pay tax, but since the department already wrote under treaty and received some information, so they are clearly debarred.
But it speaks about 143.2.
Yes, yes. Notice, so search, notice, reassessment, partial information already received under treaty or tax action information agreement. Those cases are clearly debarred. And therefore, the issue that it is creating, and you are right, is that how do you resolve such matter? A person wants to come forward, pay the tax and regularize. He is prevented from doing that.
Exactly for the information of all members, we have taken an opinion of retired justice of Bombay High Court, and he said very clearly that it is violative of Article 14 of the Constitution, but it is subject to test. Thank you.
My simple query, we have just spoken about supporting evidence about salary and other things. But it is not in all cases that everybody is serving there. There may be some Indian person who are staying there, they are doing their business and they are earning. Out of that earning, they are saving there, they are purchasing the property, they are taking the bank loan and other things. And after some times, after 30 years or 40 years, you want to return back. That money is 100% clear in that particular country. They have paid the taxes and that money is transferred in India. In that case, there is no any question of violation about the black money. What is your opinion?
Yes, I agree with you because the background here is positive. Person was residing abroad, he was doing business from his foreign source income, not with black money. Foreign reported, so I am assuming you would have paid tax in the relevant jurisdiction. So as long as one has documents that filing tax return, for example, Singapore, US, wherever, tax returns, tax files, one should read those documents.
The documents are always required to produce.
Otherwise, how do you explain that this is, see, as I said, the second requirement of undisclosed is that you are not in a position to explain the source. And therefore it comes under this way. But if one can explain the source, whether salary certificate in respect to employment income, or I was doing business in a foreign country, so I can obtain many evidences. No? The business registration number, the tax filing in that country, the taxes paid, my local balance sheet in that country, my communication with tax authorities of that country over a period of time, my correspondence with the foreign bank in that country. There are so many circumstantial evidence to support my case.
The person who is coming India from that particular country, XYZ, they have to show all this under this new provision.
Yes, because there is an obligation, you must explain the source of the interest.
Okay.
The source of the source will be asked or not.
Under section 68, you are not required to explain source of the source. I don't know.
A person is having large transactions in overseas account. By virtue of the bill, he opens a separate account in other country, transfers the fund over there, and he declares here of that particular. But later on, if the income tax department comes to know that original bank account, what will happen?
As I said in my presentation.
Full and true disclosure.
Yeah,
Thank you.
skillful disclosure is important. Thank you.
In your case, you explained, sir, in the case of the question, so you should explain maintain the bank, maintain the details. But take the case of some countries where there is no such information required, they will return or income is also not required to required. Individuals are not subject to tax in whole of the Middle East. Whole. Many countries. No, whole of the Middle East, no tax on individuals. Companies are subject to tax on Star, etc., but not Umar, but not individuals. So the issue is what are the evidences are there? And a ton of paper I have to carry in India. I have to buy a flat for preserving those papers. Waiting on the government of India to ask me a source and explain this. I think it's
and perhaps it is more important what I was so much stressing out.
Sir, in that example which you gave of the salary certificate to Ujjwal's query, so that salary certificate has to be accepted by the officer. You produce the source to the satisfaction of the department. So to the satisfaction of the department, don't you think will raise the whole purpose of the bill is lost?
That was without significant. I'm trying to visualize for myself. I come from Singapore. So my first action point, I produced a service certificate from my employer in Singapore. Right? Now, if he is not satisfied with that certificate, he has to give some reason. Some reason is to be this is fake, there is no such company. Let him give me the reason and respond to those reasons. Maybe I say, why don't you directly write to that Singapore company? I was working with PwC Singapore. So please write to PwC Singapore. Attach copy of my certificate. Is it genuine or is it fake? Whether I was on the employment for last 5 years? So I don't think so. In my view, I don't think so. It will be that easy for a customer to simply discard the evidence. Much would depend on facts. I don't think it is that easy for him.
Sir, I am not a chartered accountant. I am not a tax expert. I know that whatever evidence of the tax is the black money. Now, if it is done in foreign country by declaring that they will be paying tax in India and not paying tax over there, that may attack this provision of the not declaration of the money. I do not understand it. The persons are paying it. The double taxation is the problem. And if they are paying the tax there, what is the problem? Second thing is that if they are not able to find anything, that's why they are making some draconian law that somebody will be forced to bring that, they will take that money. I don't think if they had the mechanism to locate that money, they would have certainly done that. Now, this problem comes from the black money because 15 lakhs of rupees are not coming in my account. And they want to show that why we cannot get that black, by various things. And they want to make a provision that in future you should not do any such thing. But I am not able to understand whether this is an attack on black money or it is this thing. It is very, again, you said that amnesty scheme, that 30% plus 30%. So I say that it is 60% amnesty scheme. Why not? Again, you are letting him off, or if by any name, but it is a let off, that you are let off, because they do not want Supreme Court, the Supreme Court is very much after this, that they should not be doing any amnesty. This is a roundabout way of doing of an amnesty. So what is your opinion?
Sir, I have a different say on this. You know, to exactly legal, but a different say on this. As I understood this bill as of today, all are reading and still trying to digest. See, as I pointed out, HSBC kinds of cases are not eligible for this window because they are already on the radar of tax department. Notices have been issued in many cases, assessments have been framed. So this is nothing new for tax department. But going through the provision, it seems to me and a little surprising. I think what they are really aiming through this one-time window is to inspire those people, gentlemen sitting on the corner there has a bank account in some corner of South Africa, which is today not on the radar of the income tax department. He or she should come forward, pay 60%, and he is done for the rest of his life. So these kind of cases where the government is aiming to cover under this. So my point here is, sir, is kind of bonus for government. He is not on the radar of income tax department today. So if somebody voluntarily comes from these 60% in government meeting, they are more than happy. So there is no amnesty. I would otherwise get zero money as a government. I am getting 60%, I am happy. This is the perspective of government as I am able to understand.
Yes.
In that case also one has to declare the source of income.
Yes, this can be done only under that declaration
No,
mechanism.
it's coming from the South Africa. He said he is coming from South Africa. He is coming under the one-time window. Then he is to specify the source.
No, he will just articulate. He doesn't need to or satisfy the area. He has to make a truthful declaration as to from where he got that money and why, when he opened that account. So there the onus is less.
No, person coming from South Africa and make a disclosure here.
Sorry, I am not able to.
Person coming from South Africa and making disclosure here. What is the guarantee that the government of India will not communicate with South Africa and then South African government prosecuting them?
So in other words, I think somewhere government have missed out the point because of political reason or whatever, They are not clearing up, they are not regularizing the things. See, the expectation of the people from Modi government before election or around election time, because this issue was already hot, HSBC, it's going to last more than 2 years. The general expectation was that it may not be exactly amnesty scheme because of that Supreme Court problem. But I am using in the loose sense that one time passage will be given to people that come forward, pay applicable tax and then don't repeat. Something like that. But they have already kept HSBC kinds of cases outside the purview of this window. Then what are you resolving? How are you resolving? Let me take that South Africa example forward. Why that person should voluntarily come for pay 60%? He might as well donate the money. Because nobody knows that he has an offshore account. He can donate it, doesn't matter.
Sir, you say that source of income is shown, service or business.
Can I just make one request? Instead of calling me sir, it will call me as Sanjay actually. I am far junior than you.
आप बैठ के बोलिए भाई क्या
If you say that if some source of income is shown, service or business, then there will be no question asked. But will they ever not ask the entities for the...
No, I didn't say at all. On the contrary, I am with you on your question. The entries in the bank account are not sufficient to explain source. ITO will have to go beyond and will go beyond the way in which we understand the attitude of the income tax department in India. I guarantee you that it will happen. Guarantee. He is going to go into the details and ask him, what is the source? Where from this entry has come? Please tell us. Sir, this is from another bank account. It means your another bank account also has come into the This is my salary income. This is my business income. What sort of a business? Give the details of the business. Grade the profit loss account, balance sheet. Did you file the return of income in that country or not? Now the question is, if you have paid the taxes abroad, you will not get credit here. That is another danger. Foreign tax paid abroad will not be deductible here from the tax liability in India. Even if you are double tax treaty with that. That is most dangerous aspect of the bill.
I have this question for Sanjay and DP both.
No, Sanjay.
Your experience, you must have the benefit of both. There is a person who has expired in India. He had made a bill that executed legal aid, which has been promulgated by the Bombay High Court. Now, no one was aware. He had gone for some business outside India and had bought some asset, created some asset. But recently, there is an intimation from this particular foreign country that so and so person is holding so and so asset and possibly trying to tax or whatever. So that intimation has come to the legal heirs and the executors. So I have two questions. A, what are the implications on the executors? There is one chapter on the lawyer, executors. Two, implications on the legal heirs, if any. And three, can in such a situation this one-time window be away?
See, if some information has already come under treaty, then there is the express bar that one cannot go for.
Not under treaty.
Under treaty or tax.
No, it's from an agency based in outside India. Has sent some communication that so and so asset.
No, but not to the tax department.
No. To the legal heirs. To the legal heirs.
Then there is no more than you can go. So I wonder why a non-tax agency of a foreign jurisdiction, when it is coming to the legal and not to the government. Then I think one can still explore. The bar says any information received by a competent authority of India, tax department.
What are the implications
soon executed in the legal heads. Something happened, say, long back.
So they will have to consider. They will have to consider whether they want to make a declaration, make a determination when it was open, when it is reported here earlier, it is written is reported, how you funded their offshore account, or how you acquired their offshore asset, from which money. So it's a one we have to examine.
So in a worst case scenario, what are the implications? TP, assuming, I mean, say, that doesn't work out.
Worst case is 10 lakhs and jail. Legal, see, there is a principle of criminal law that a person who committed the crime, only that person can be punished, not the legal entity. Criminal law.
No, but the question
But 10 lakhs will.
is very valid. If the executor makes a disclosure, and in respect of executor's own assets, they cannot make a disclosure. You can make a disclosure once. You can't make two disclosures.
Once in lifetime. And please note, this disclosure is for the foreign asset, not for the assessing of the person, for the foreign asset.
I have a question. Let's assume that somebody had some income and he wants to bring it back into India. He pays the 30%, he pays another 30%. But is there a compulsion on him to bring the balance 40% back to India? Question one. Question two, suppose he has Indian sources to pay that 60%. Can he keep the money abroad, or there is a compulsion on him to bring the money back into India? That's one question. Second is that when the earning took place, the dollar rate was 30 rupees per dollar. So does it pay tax with reference to 30 rupees or the existing rate of 60 rupees?
So to answer your first question, sir, if you go back in history, VDS 1997, there is a question I have here. In the context of effective, one of the questions to the board was, am I supposed to credit the amount in my books of account? And the reply reads that it is expected that one will credit the amount to the books of account. Now consider a case, two scenarios. Mr. Same things. For example, one scenario, some amount is still lying, or what amount is still lying. Plain when normally life doesn't work that way. When he can pay after paying 60%, obviously he would want to credit with the white capital here. But if money is already utilized, lost, whatever, how will he credit? I suppose, and we have so many accounting friends here, I suppose one cannot legally create a fictitious entries in the books of account. If no money is there, I can't create my capital account. Where is the money? And we are silent that we must credit your books of account.
So my question is, can somebody keep that money abroad and not bring it back to India?
Can somebody
Keep money abroad.
Suppose that person wants to keep the money abroad and not bring it.
We is silent.
I'll explain this question little properly. I was abroad, working abroad, earned the money abroad, and kept abroad, not disclosed to the government of India. Now government of India has given this one-time window, and I have not been disclosing after becoming resident. So now I am under the fear, so I want to make a disclosure.
The one-time window.
But question is, after paying 60% tax out of my sources within India, I pay 60% tax. Can I retain my foreign exchange assets outside India?
Sir, law is totally silent. Law is totally silent. Then you have to consider FEMA provision.
In my opinion, you can retain. If it is a foreign sourced income.
Yes. That's why I'm saying
Indian
FEMA.
sourced income, if it is allegations on you are Indian sourced income, then you will have to bring it. But if it is
What
a foreign
exchange rate do you take? That's the second.
I will apply the logic that when income tax department makes an assessment, they levy tax of the relevant assessment year. Let's say account was opened in 98. Let's say 98 rate was 40% and surcharge was there. They compute tax demand based on 40% plus surcharge. Although today let's say there is no 40% tax. So applying the same logic, the relevant time if the value was that much, I would like to plead that you take that value.
No. Possibly we will have to wait till the rules are notified. Valuation rules may cover such situation. May cover. Yes, last.
So Ministry of Finance is going to declare monetization of gold. So I convert my foreign money into gold, melt it, I will declare it to government and earn interest on that, which is going to start. So if this bill is still not passed and the monetization scheme comes, and I earn interest on that and I have not declared, will it not be
indirect of the
what is the best asset to convert back into
I will repeat the question which he has asked. He says, I have foreign assets. Undisclosed foreign assets or disclosed, whatever. I am now resident, I want to convert that foreign asset into a gold. And now gold monetization scheme is expected to come. Today all the newspapers are flashing that. Question is whether I will be taxed on that foreign gold. Once I surrender the gold to the government for earning interest, whether I will be taxed. That was his question.
You can be taxed on the interest.
No, whether you will be taxed on interest.
I will declare it.
I didn't get your question properly. Will you be taxed on the interest on the gold monetization scheme? But that gold monetization scheme has not yet come. Well, let us see what is the... Once it comes, then we can answer that question. Can you imagine what will be the gold?
No, sir, I can't imagine that. I think we are jumping the gun. Before you reach on the taxability or treatment of interest, first you decide what is the principal amount before the capital, undisclosed capital.
Yeah. Everybody, like you, everybody will be very happy that if the source is not involved. The government will have a huge success on gold monetization scheme if the source is not inquired. Let me tell you that is not going to happen. They have said if you have disclosed the gold in that monetization scheme, possibly some teasers have been known saying that wealth tax will not be levied for past years. For few years, you are holding a wealth in a gold form which is liable to wealth tax 1%. We have not disclosed 6 years gold wealth tax scheme. We have not disclosed. We will not levy wealth tax. That is what some clarification by your teasers have done. It is not a clarification per se. Only rumors. Yes, please.
Just raise our subject attack on black money. The general public is what the offenders.
They are under the impression the government is thinking that in the foreign countries there are lockers in the bank whose names are they are not going to disclose, and there whatever the money put and which has now open and sent, that is called attack on black money actually, according to me. Those who are serving, those who are doing business and they are transferring time to time in India, that is not concerned with this attack on black money. Exactly what I want to say, that lockers, that black money, the people is knowing what Baba Ramdev said, that 15 lakhs rupees for person will get. That black money and what we are discussing is a person who is actually serving or doing business and they are transferring here. Both the subjects are distinct group.
The issue is very simple. That money is lying in the foreign bank lockers. You bring it back. You have to disclose. How do you bring back? You have to bring back by way of a bank remittance. You can't bring it by way of a physical carrier. So therefore, if you bring foreign exchange of such a valuable amount here, you will be caught in hawala also. So the issue is foreign bank account which you are contemplating, foreign bank lockers and having a sizable assets there, and you want to disclose. We have taken the leaf of this scheme from American FATCA. America has introduced a provisions of FATCA, Foreign Accounts Disclosure Compliance Act. In that scheme, they have contemplated exactly what the Indian government is now contemplating. And resident of America, green card holder, or the citizen of America, wherever he has foreign account, he must disclose in the return of income, whether it is taxable or not, they are not concerned. You must disclose the foreign bank account in your return. Automatically, government of America has right to get that information from the bank account. Having not disclosed, it is liable for penalty, liable for interest, liable for tax. We have gone by the same mechanism here. Now it is a perpetual scheme. You have to make disclosure, pay the taxes, liable for, if suppose you are not disclosed, you are liable for an action. And that will be the action as proposed, as Sanjay has discussed everything. The whole government of India, this scheme has a flavor coming up from Supreme Court, a committee which was appointed by the Supreme Court SIT, Special Task Force. This SIT has given direction to the government of India to come out with a scheme like this. And because of this pressure, and even the return of income which was required to be, which was notified, was also because of the pressure from SIT. while talking to Knock, I was told that their requirement of seat was much more draconian than what it was. So they diluted substantially. They did not agree with that. But nevertheless, ultimately they have come up with a form which was itself was so draconian. I can't imagine what else could have been so much information which they would have sought into. So this is what the actions and reactions going in the country. And the reactions are mainly because of the size of the black money people are talking about abroad. Nobody has an estimate in how much. If you ask Swiss authorities today, earlier they were saying $2 billion are lying. Now there is hardly $500 million, and 99% that must be non-residents accounts, which are already disclosed. Or they are non-resident out of India, not returned. So the issue is these are knee-jerk reactions. But you are saying that salaried employees and hard-earned money which he has got, when he is returning back from the date when he has returned to the country, if he has made disclosure, then he has not to worry. But you see today, the law in India from 2012, final assessment year 12-13 onward, the return of income has schedule FA, which has 5 questions to be answered, and with details. Your property abroad, disclose the property and the benefit. Your bank account abroad, disclose maximum balance. You are an authority to operate bank account abroad, disclose. You have an interest in any entity abroad, disclose. You are a trustee beneficiary or the settlor of a trust abroad, disclose the name. The worst case would be a settlor abroad. If you are resident, then you are gone because you are perpetually to disclose unless the trust is dissolved. But beneficiary and the trustees, they can resign, they can relinquish themselves from it. They say, I don't have the access. So the issues are, if you have not disclosed those 5-6 questions, then the penalty is 10 lakhs. Now you disclose. Now the issue is so serious. In the first year, 90% of the people are not realized that question. They have made an attempt to disclose in the second year. They corrected in the third year. In 14th return, a lot of people have disclosed. The question is in the first or second year you are not disclosed, on fourth year you are disclosed. Whether it will also amount to non-disclosure in the respective year is an issue by itself. So these are the issues which we are facing. Friends, there are a number of issues in this black money scheme which are difficult to address, impossible to deal with unless the bill comes in and becomes an act and the revenue authorities come in the public. I think I would request Chamber to get the revenue authorities on the Chamber's platform to give clarification on number of issues where we can raise them, so that we will come to know about what is that happening. And then only we will come to know what is the real sense of the black money bill. Are these really so serious or they are also joking? And if that is the case, we will then take call what is to be advised to the client. Thank you very much for listening us patiently. May I hand over the mic to the organizers, please.
I would just like to respond. This is a very serious issue. A lot of things have come out here. There are, on one hand, we support government whatever they have to do to deal with the black money. Especially, I think when it came to foreign bank account, it was associated with certain politicians, those who were robbing country and then they were parking funds abroad. So the matter is serious. But on the other hand, this cannot become a tool for harassment. We have taken this very seriously, and with your help, sir, Mr. Swaz, Mr. Sangvi, Mr. Advani, and Mr. Savla, and all those who are here, I think we are happy to make a presentation to the Revenue Secretary and also utilize our representative, Member of Parliament. They are a very good friend of Chambers. I think we should use them. What are the Member of Parliament here for? You must listen to us. Secretary may come here, may not come here. If the mountain doesn't come, we will go to mountain. But we will also write to us. I don't think we should wait for the meeting. We should first make a formal representation. We should have media appearance on this. We should have a press conference on this. And if the need be, we should join anybody and every organization. Every Chamber of Commerce. This is not a proprietary. Thank you. This is not a proprietary of one issue. This is a public issue. And if the genuine taxpayers are not encouraged, supported, and on the other hand, if they are harassed, I think then you are telling people either don't pay tax or you go and do business some other countries. We have already exported a lot of business talent abroad. Who is who of India? You name the top industrialists. They are all residents of London and now they are all residents of Dubai. That little desert, which is smaller than Kutch, has prospered at our cost. There is something not right. And I think we should take it very seriously.
And next, which is Singapore.
So Mr. Pradhan, I think all our neighboring countries, Singapore and Dubai, will be thanking our politicians. Thank you very much, sir. Because of you, we are progressing. Those are the countries before they take off and before they land, they are in a foreign country. Such a tiny island, they have progressed. Mr. Pradhan, I would request you to please make a roadmap, make a minutes of this, and let us make a submission to the Revenue Secretary.